Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, September 29th. It's straight up 6 o'clock as I'm starting the video this morning. As always, please set your video player at 1.25x and we'll get through this material a lot quicker. Taking a quick look at futures. Broadly speaking, we're getting a bounce this morning, at least so far, with equities up about 0.8%, and the commodity complex, oil, nat gas, copper, down about 0.6 today, and then precious metals are dead in the weeds, not really doing a whole lot. On the macro front, we've got mortgage applications, we've got FOMC member Harker speaking at 9 a.m. We've got pending home sales at 10, oil inventories at 10:30. That's going to be closely watched. The American Petroleum Institute comes out on Tuesday nights with their estimate, and they actually had an inventory build, which was a surprise. It's been down 8 weeks in a row. So the official one from the Department of Energy today at 10:30 will be closely watched. Then we've got Jay Powell at 11:45, and then we've got 3 more FOMC speakers slated for this afternoon. I'm sure they're all going to be, have the same more or less playbook to talk about. And one of the most interesting one-liners coming out of Jay Powell's testimony yesterday on Capitol Hill was Elizabeth Warren saying, "You, Mr. Powell, are a dangerous man, and you are not getting my vote for renomination to be the Fed chair." So those were stern words for Mr. Powell. You never want to be accused of being a dangerous man. So we'll see how that goes. But keep in mind, Yellen is on in Powell's corner, so she's on the cabinet of Biden's cabinet, and Liz Warren isn't. So you got that super progressive wing out there, and then you got maybe more moderate voices being more for Powell. I'm not sure. We'll just have to see how that plays out. Then this morning on the earnings front, before the bell, we've got Cintas. Might be a read on business activity since they service businesses of all sizes with their products. I didn't see much else today on the earnings front. Tomorrow morning, though, we've got CarMax, Bed Bath & Beyond, Paychex before the bell. But overall, a pretty light week. Now, last night after the bell, we had Micron, which fell apart. Had a really bad day at the office after earnings were announced. Even heading into earnings, I think it was down 7% or something like that. I saw a lot of people shooting against it on the options chains, so they weren't expecting too much. I think they're going to be quite pleased this morning when they wake up to that gap down. So we're going to have to watch semiconductors because that's a fairly large component of the SMH. But not only that, sentiment also may bleed into the rest of the sector. Now, obviously, we had a pretty brisk sell-off yesterday, and the one thing I want to say is, don't buy into that narrative out there that it's about the debt ceiling, right, that needs to be raised, because that is the end of the movie. They're going to raise the debt limit. Just what I can't tell you is it going to be a 2-hour movie or a 3-part miniseries, over the next 4 months where they, okay, well, we're going to fund the government through the 1st of December, and then the 1st of December comes, and you know what? Let's just tackle it after the Christmas break, and we're all back in the saddle on January. So let's do a stopgap measure into January, and then in the new year we'll figure it all out. So a lot of different scenarios there, but it's not what caused yesterday. What caused yesterday is the cumulative effect of a 25-point basis pop on bond yields. You can see we're down here about roughly 1.3% as of last Thursday. And then we've done a moonshot up to 1.535, call it right here. And actually during the day yesterday, we were a lot higher. We were up in the 1.575 range. So whenever you've got a speed move like that, all the interest rate sensitive stuff is going to take a nosedive. We saw that yesterday with tech leading to the downside, even affecting the big mega cap names, the FATMAAN names that we've been following. But you look at bubble names, you look at fintech, Square, PayPal, there's Zoom. I mean, there's a million of them, all getting clipped. The ARC complex got hit pretty good yesterday. But then look what didn't get clipped. We were talking about Hilton and Marriott. I looked at them, in the afternoon. Not even a paper cut, hardly. I mean, just not even down $1, not even down 1%. Look at fertilizer. A lot of us are in Moss, but you've got CF, Moss, and Nutrien, NTR. Those are all looking great. They weren't even hardly clipped yesterday. So the intensity of the sell-off is going to be focused on those interest rate sensitive names. And what makes it more dramatic is on these cap weighted indexes like SPY and QQQ. I mean, if you get Microsoft selling off and you get Google losing $100 and you got Amazon testing the 200 and you got Apple falling apart and you got Facebook falling apart, I mean, those major averages are coming down. There's just no way around it. So I think going forward, you're going to want to pay close attention to the cyclicals, financials, commodities, reopening trades, right? This reflation idea. And I think that tech is going to stabilize if we hover in this area for, several weeks. Now, if we just go launch up to, 1.75, there's going to be some carnage. So let's get into the charts. So anyways, okay, we're up in this new range here at 1.535%, let's say. Let's see how we act here. If you see a pullback below 1.5%, that'll take some of the pressure off of the tech and bubble names. But I don't think you're going to see that happen. I think rates are going to hold that 1.5% support level. Here's the TLT short that we've been talking about. I think right now, if you're looking to get short, you're probably late. And what I would do would be try to catch a green day, try to catch a little kickback rally to 145.25, something like that, and then hit it, and then look for moves down into the low 140s. VIX. We started below 20 in the high 19s. We made it all the way up to 25 and then closed the day just above 23. And we're trading about 22 right now. So I think it's going to be paramount when you are watching trading during this volatile period to keep VIX on your board and just make note of the intraday trend. Is it gradually falling or is it gradually rising? And so today, with the pre-market bounce, that's why you got VIX down at 22 already. So if the bounce continues and they drive it from 22 down to 20, you're going to be feeling a little bit more secure in that bounce. If you see VIX rising as the bounce proceeds, then you got to be a little worried, right? Why is VIX going up when price is going up? That's usually a little warning sign. So we're in this yellow zone here for equities. Anything above 25 is got to be a no touch, or you got to be short, kind of a deal. And then things below 20 are generally going to be positive for equities. But in here, I think it's all about direction and speed rather than, a specific level. Because you can see this is resistance here at 25, and this is another important band at 20. I think in here, in the mid to low 20s, between 25 and 20, it's kind of a no man's land. You're just looking for direction and trend, not a specific level per se. Just to let you know, I haven't forgotten about them. Here's the Mcclellan Oscillators that I like to keep an eye on. You can notice here on the NYMO for the NYSE, we're right in the middle of the range, and that's the same thing is true for the NASDAQ. So from that perspective on the oscillators, no predictive value in those. So we got to wait for either a break lower or a break higher on some type of a rally to where we get overbought or oversold. And then these oscillators become very, very important and helpful. Equal weight SPY. So now we're down below the 50. We're down below all the moving averages. The level that's got to hold is 151.50, or else we're going to be coming down into this back into the range like we did last week with the Evergrande drop. So that's the level to key off of. Any kind of recapture of 153, I would think would be very positive. You may want to, well, it's always a good idea, but if you've got a pen or pencil handy, I'm going to give you the key levels on these charts that you can kind of jot down. SPY daily, gap down below the 50, which comes in at 440. So your 50 EMA at 440 is a good level as a go, no-go line as far as recapturing the 50 would be really, really bullish and helpful. On the downside, we've got support at 432.50, and then we've got a low touch down by 428. So those are important levels to watch as we go down and revalidate these lows on the SPY daily. Now, as we go to the 2-hour, you can see the granularity. As we go back up this morning, if this bounce proceeds, I think 436 is going to be an important one to recapture. And then I see 438, and then here we've got 440, which is the 50-day moving average, right as resistance coming into the gap that runs from 440 to, let's just call it 443. So you've got a number of points here where SPY could bounce to, but then, potentially find a problem spot and roll over. 30-minute chart, you just get the granularity of it all. You can see that this low value was down at 429.50, 430 area. That's got to hold on any kind of a kickback rally and then roll back down. Because think about it, you've got a big leg down. That's your A move. You get a rally, print a nice bull or a nice bear flag here, and then you get the C leg coming back down to revalidate this low. So you've got that classic A, B, C move, and then there could potentially be a double bottom there at 430. But we just have to see how it plays out. So moving on to the Qs, I've dropped in some other trend lines for visual reference. You can see here how important 360 is, where we closed yesterday. Going back in the chart, support here, support here, support back in here, and we've got one last sizable volume over price bar. But notice what happens as you move below 360 into this volume over price void, where there haven't been a lot of transactions. You could get a very fast move if it happens down here to 342. You'd probably see a bounce along the way at 352, 352.50, but just from the standpoint of the Qs seeing the most pressure, I think if 360 does in fact break and you see the FATMAAN names falling apart, then I think you get that fast move in QQQ, and that'll probably be tied to some kind of a follow-up rate spike, right? Another catalyst, whether it be Evergrande or just in general a rate spike, then you might have that catalyst to drive this down to these next two levels at 352.50 and 342.50. And notice that's where you've got the 200, the rising 200. So that would check off a lot of technical boxes. I mean, we've heard people talking about, how many months and months and months it's been since we had a 5 or a 10% pullback. Well, a tag of the 200, there's your correction. And then we can take it from there into the fourth quarter, which I expect to be bullish. But we got to see where this corrective move takes us. And remember, kind of my go no go line is that 50 EMA. So, if we get some kind of a bounce, I'd like to see the 50 taken out and this downtrend resistance taken out up near 370. That would be going a long way towards saying this was the low. The low is in for that move. Here's a 2-hour chart, just giving you some more granularity. I've dropped in the gap levels. You can see on the gold, you've got the 50-day coming in there, and you can see that already price has undercut last Monday's low right here. Didn't quite make 360 last time, but now we're sitting right on that level. So, we really can't go much lower and expect to hold it because, like I said, you've got a big void down there. So let's see how they can bounce it today and if they can, build on those gains throughout the day or if more sellers come in. Qs, 30-minute chart, not really useful here. This chart will have to reset on the open, and then we can see the lower levels. So I would just go off the 2-hour chart here. Moving on to IWM. Had this pullback move into 221, 221.50. You can see the gold EMA, that's the 50. And so it moved into that support area. You can see the open gaps below will be natural targets if we break lower. But that's not a foregone conclusion. The reason I say that is you look over in the 30-minute chart where I've dropped in the fibs for this up leg, this uncorrected up leg. You can see here that we've pulled back 50% right back in to the largest volume over price bar that we have on the chart. Very objective long level here. Not only because it's an important technical level, but you've got that technical level coinciding with the Fibonacci retracements. And it's really not a coincidence that you see here, we've got a level at 219.50. That's right where the 618 retracement lies. And then you can see the 38% was right here at 222.50. So in this particular instance, it makes the levels even more powerful when you've got the Fibonacci lined up with technical levels on the chart. So I'm looking for a bounce there in IWM, and I think at least in this foreseeable future, I think you're going to see outperformance in IWM versus tech because it's loaded with the regional banks, reopening plays, cyclicals, stuff like that is where the sweet spot is for IWM. So I really think that you're going to want to keep a close eye on that, and I think you're going to see some outperformance there. So as we get into the FATMAAN names, if you're new to the channel, welcome. I hope you find value in the levels and the strategies that I point out to you. And I hope you subscribe to the channel. Hit that alarm bell. You'll be notified of my content. And if you want to go the extra mile, it would be great if you join the team by finding the link in the show notes where you can drop your email in and register for all my content. That way, whenever I send out something new during the day, at night, anytime, you'll get it right in your inbox. And while I'm on that topic of doing something else, after I'm done with this video, I'm going to put together some trade ideas for you with some fresh names for you to take a look at. So maybe that's an extra incentive for you to subscribe to the channel and register for the content. That would be great. And of course, longtime listeners, thank you. Really appreciate your support. So let's look at FATMAAN. Facebook, gap down, undercut the prior low, finding support here at 339. What I want to look at here is the daily chart, and you can see that right now we're in a void, a price void. I think you're going to get some support here at 336, but then after that, here comes the 200 at 325. So I think 336 is going to be a key level right in here, but below that, you've got the 200, and then you can see all the bounce levels up above if we start going back the other way. So I think we're getting close to that 200, and if you were to get that move over the next few days, I think that's a place where you're going to see a lot of buyers step in if, in fact, we make it to the 200. Similar kind of a chart here on Apple. Weak all day. Testing the prior lows down at 141. You've got the bounce levels above at 143. And you've got the gap at 144.50, etc. Let's take a look at the big picture on the daily, and things will make a lot more sense here. We've got a level here at 141. If that were to break and you get a move down, you've got what essentially becomes triple support. What do I mean by that? This 136, you can see, was a breakout level. So that makes this line really important. You've got an uptrend line coming in from below. So that's your second level. And then right below that, remember, this is going to be rising in the days ahead. So you're going to have the 200 coming right into this area, probably at almost the same time. So if there was ever a chance or a time to give Apple a long try, would be if price finds its way down to 136. And that would be a level where you want to hit it with a bazooka, with a stop just below the 200, wherever that lies, and then look for that move higher. But right now, 141 is support, so you can trade it that way actively today if you want. Tesla, relative outperformance yesterday. It was, of course, down 1.75%, but taking a look at that versus semiconductors, which were down 4%, and some of the other FATMAAN names that were down 3+%, Tesla more than held its own yesterday. So now today, really no change in the chart from the standpoint. You've got a pivot at 790, and then you've got a support layer at 770. I think in the middle there, you don't really have a trade. You can see that yesterday we touched both sides of that. You know, our high was 795 and our low was 766. So we explored that $20 range. We can go back to the 60-minute chart and look at that. You know, here was the yesterday's action. But as far as today goes, I think you can buy 770, and you can certainly, you know, if there's a bounce, buy a breakout above 790. But you know, Tesla's been looking pretty strong lately. So if you got another touch of 770, you could buy it there. And then, of course, if you got to move all the way back to 760, that was the original breakout level. That would be definitely a place to try along. Microsoft Daily. How many of you shorted Microsoft yesterday? We had talked about it. Turned out to be a really nice trade because it was down 3.6%. We had talked about this level of support here at like 288, 289. We had the midpoint of the channel coming in. We said if it lost that level, you could be short against that, and then it moved its way down. I think going forward, you can do one of two things. If you see a little kickback rally today, back into 287, 287.50, you could short it there and look for a move down with a stop just above. Or if you see a down move out of the gate, you could use yesterday's close as a level to shoot against. But to my eye, things look well on their way to coming down here to the bottom of the rising channel. And again, that would be a place to try a long. And if that long try fails at 273, then you're coming back to the 200 at 260. You can see it coming in here, and that would be your next long opportunity. Amazon. All the way back to the 200 already. I went back to the daily chart. This 3290 corresponds to the 200 EMA. So we undercut last Monday's low, came down here to 3290, which held. I didn't look at Amazon specifically in the pre-market, but I assume it's bouncing like everything else. So you've got a level here at 3340, and then you've got a gap entry at 3365, and then you've got some downtrend resistance to deal with there. So you've got some pretty clear levels. If for some reason, or if the weakness persists, you get a kickback rally that fails, and then you lose the 200, much, much lower, because then you'd have that A, B, C move again. But now you're below the 200, and that would not be good for Amazon. That would not be good for the Qs. That would not be good for the market. So keep your eyes peeled on that one. Google down $105, almost 4%. Long time since we've seen a move like that in Google. And you can see here, I went over to the daily chart, dropped in the 50 EMA for you at 27.50. So now we undercut last Monday's low. We're down here at 27.10. I think if price can recapture the 50, that would be hugely bullish. I think you'd see a fast run, at least up to the gap at 27.80. And if things proceed, then you got a pretty sizable gap fill up to, let's call it 28. Well, we got it right here, 28.21. So that's going to be $40 gap fill. So that's certainly one you want to alarm and be ready to capture if we get that bounce. Netflix. Pretty easy here as far as picking out the pivot. It's 584, and then you've got a little resistance at 590 and some downtrend resistance. And then above that, you've got 597.50. But then below, you've got this gap to fill, and then you've got key support down here at 570. But this was another one, some relative strength down, 1.5%. So that held up very, very well yesterday. Not so much in semiconductors, down 4%. And as I mentioned, Micron down after the bell this last night, but be reflected in the charts this morning. So we're down at this double bottom low, 261, revalidating last week's low. So now that has to hold, or we go lower. We go down and fill this gap and probably break below that big primary breakout area that we've been watching and wrestling with for months and months and months. I went and grabbed the 50 off of the daily chart, and it's right here at 26 or 265.50. So if we get a bounce today, that's going to be an important level. And if it's going to roll over, I would expect it to happen, against the 50, testing it from the bottom side, and then have it roll over. If it breaks out, that would be hugely bullish. And then you've got the gap entry here at 268 and the gap that goes up to 271.50. So let's go over things before we wrap up. The turbulence is because of the rapid rise in rates. Oh, and before I forget, that 7-year bond auction yesterday came off pretty well because before the auction, rates were up in the like 1.58 area, and then after the auction, rates pulled back. So that went pretty well. And while I'm on the topic, I forgot to see if there's a bond auction this afternoon. There may be a 10-year auction this afternoon at 1:00. So you can check that. Go to any economic calendar; they would have that. And I'm sorry I didn't look at that. So rates are paramount. If they stabilize here, I think the market will stabilize. If they rocket higher, I think you're going to see a lot more turbulence, especially in tech shares where that pressure is going to be most apparent. If rates do stabilize and we get a bounce, I favor IWM on the indexes. Why? Because it's loaded with cyclical names. banks reopening, cyclicals, hotels, stuff like that. And so when you're looking to be positioned going into Q4, once this turbulence settles out, I like commodities, I like energy, I like financials, cyclicals, all that kind of stuff, hotels, leisure and travel, stuff like that. I think it's going to do real well. I think we may get a bounce in mega cap tech, but I think they're gonna while holding their own, most likely underperform some of these smaller names that are more cyclically driven. So we'll have to see how that pans out. So look forward to the video this morning on some new trade ideas. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.